Hey, Jason Malabuti here. Welcome to this week's video. And today we're going to be talking about the 6 things that you must do before January ends to make sure that you are maximizing your tax liabilities. Okay, so before I go into the list of the 6 things that you must do before January ends to make sure that you are maximizing your tax savings, it's important to note why are these things important. Number one, it's important for you to be proactive. Please do not be one of the many people, high income earners, that wait until April, scramble, and to put all of their documents and receipts together to get it to the tax professional. And this leads to a lot of inaccurate reporting and also missed deductions. Okay, the first thing that you must do is do not procrastinate. Okay, if you have a business, let's get that reconciled and cleaned up. Let's get your books into order. Number two is start collecting your tax forms. You should be getting your 1099s and your W-2s in January, so be on the lookout. Always check your mail, and once you get those documents, organize them and get it to your tax professional. If your tax professional uses a secure portal for you to upload all your documents in a safe manner to avoid getting hacked or getting your identity stolen, please always use that secure portal. Please do not email your documents as an attachment to an email. I always tell that to my clients. Please do not attach W-2s, 1099s, or other tax forms to an email because it has your sensitive information on there. And then if you send it via email, you're always at risk of your tax documents getting intercepted by the bad guys and getting your identity stolen. So please be careful when it comes to that. Okay, number two is check your legal entities. Are you properly set up correctly? Okay, do you have an LLC or are you a sole proprietorship and you have an active business? If that's true, you might be paying too much in taxes. This is called self-employment tax. When you don't have the proper entity structure set up, what might be happening is that if you have an active business, whether you are a realtor, a wholesaler, or a house flipper, or you're a agent, a broker, etc., what happens is that if you don't have the proper entity set up, your entire profit for that year is subject to self-employment tax. Okay? Versus if you went to your CPA and you guys determined that maybe a corporation is the best fit for you and your business, then only a portion of that, which would be your wages, would be subject to self-employment tax. So please talk to your accountant before the month ends. It might be too late for your 2025 taxes to retroactively erect a new legal entity, but at least moving forward for 2026, you'll have the correct legal entity structure and you'll be saving more money on your taxes. Okay? Number three is maximizing deduction. Alright? Maximizing deduction. So making sure that you have all your receipts and documentations, especially if you have a business, whether that's a Schedule C or if you have an LLC or a S corp or C corp, it doesn't matter. Make sure that you have all your documentations, you have all your receipts entered into QuickBooks, so you are maximizing your deduction. Okay, on the business side, if you are an individual, look at your previous year's tax return and also look at your current situation for this current tax year. Okay, are you taking the standard deduction or are you taking the itemized deduction? Okay, remember that you can either take the standard deductions, and my team is going to put the amount for the 2025 standard deductions here on this screen right here, or if your itemized deductions are more, then you can go ahead and take advantage of that and take a higher tax benefit for the year. But if you're going to be taking a itemized deduction, it's very important that you submit all your receipts and documentation for all of the deductions that you're going to be taking this tax year. So that means any medical expenses that you might have taken, please organize that. Have it properly sorted for your tax professional. So this means medical expenses, dentist expenses, insurance premiums, okay, things like that. Any SALT deductions. So this means your property taxes, okay. DMV fees. Make sure that you have that in your folder to submit to your accountant. Also, your mortgage interest for your primary residence. That's deductible. So you should be getting a Form 1098. Make sure that you send that to your accountant as well. Okay. So all those itemized deductions, send it to your accountant. Oh, and how can I forget? I don't know if I said this before, but property taxes is deductible as well. Number four is the making sure that you track of all your miles, right? Especially if you are a Schedule C sole proprietorship business. Okay, make sure that you track your miles for your business and your total miles. Okay, my client was asking, how do I calculate my miles? Well, you take a car, you check how many miles did you have on January 1st of last year. Then you check how many miles did you have on December 31st last year, and there you go. That's your total miles. And then from there, you can estimate, okay, how many of those miles is business miles? Okay, so that's how you calculate your miles. Very important. Get that to your accountant because you could get a deduction for that as well. All right. Number 5 is the retirement account. Make sure that you talk to your tax professional about your retirement account. Okay. Will it benefit you if you maximize your retirement account? Right. So this means 401ks, IRAs, HSAs. Okay. And then remember, for the 401ks, the limit are 23,500. And if you are on the employee side, your last day to contribute is December 31st, 2025. However, on the employer side, your last day to contribute is April 15th, 2026. So this information is useful for people who own their own businesses, because when you own your own business, like let's say an S corp, right? Yes, on the employee side, you need to contribute by December 31st, 2025. But on the employer side, you have until April 15th, 2026. So you have a little bit more time to contribute on the employer side. Okay. So remember, employee side 401k must be contributed by December 31st, 2025. Employer side must be contributed by April 15th, 2026. Okay. And same thing with the IRA. Right? For the IRA, you can contribute $7,000 for 2025, and you can make this contribution up to April 15th, 2026. So that's why it's important to talk to your accountant. Does it make sense to max out your retirement accounts? Is it going to save you money to max out your retirement accounts? If yes, then know that you might have a little bit more time to make a contribution. Employer side 401k, April 15th, 2026. For the IRAs, Roth or traditional, you can still make a $7,000 contribution until April 15th, 2026. No problem. Okay? Okay, so there you go. Those are the 6 things that you need to do before January ends to get a head start on your tax. Alright? So if you have any questions, if you want to become a client with our firm, please schedule a call. And don't worry, your accountant handles that.